This
Go.
is episode number five of the Compounding Interest podcast. I'm Mason Ward. This is Zachary Bassett. As per usual, we are back to talking taxes. We just filmed the one for the ERC, which we're actually releasing really soon, sooner than this one. So you'll hear that one well before this. But we just had a podcast yesterday with Sam Taggart, and on the Door to Door podcast. Or Door to Door Experts, what is the podcast?
Door to Door Experts.
Yeah, whatever.
Yeah.
So if you're a door to door guy and or you just want some small business help, Sam Taggart's a great resource for sales and all sorts of things.
And subscribe to the Door to Door Tribe on Facebook if you haven't already, because a lot of good information flows through there.
So we're actually going to be speaking at Door to Door Con and at one of their events or one of the workshops or something. But one of the biggest points we try to get across is the importance of tax planning. I think we've hit on that here and there, but a lot of people don't understand how much money it can save and how much money can be put to use in building assets by just knowing what your goals are and putting together your plan. And so when you meet with people, Zach is like, again, you've probably done 5,000 to 10,000 tax planning meetings?
I've done more than I can count.
Yeah, so thousands of tax planning meetings. What do you think the biggest issue you run into with people when you start those tax planning meetings?
First off, since you and me have been doing investing together and tax planning together, what kind of change have you seen in things? Yeah,
I think when I first shifted from W-2 to 1099, that's when I started recognizing, really it was just for me, it was having another place to put, just have another tax shelter, have another opportunity for me to build assets, for me to put money aside for a rainy day. And I think most people don't even recognize how many opportunities there are for both saving and building, right?
Yeah.
So.
Yeah, with you and me, just since we became partners, we've been investing together.
Oh, yeah, totally.
And, we budget out every dollar, and it's incredible to see how much you can actually compound your net worth in 1 year by doing these tax saving strategies. And then you do it again the next year, and it compounds again. And the next year, and if you've seen the rule of 72, you can quickly see how someone like me and Mason, or anybody that makes over $100K a year, can become a 100 millionaire in no time. Not no time, but 10 to 20 years. It's a realistic it's a probability that it will happen if you follow the set of rules for 20 years total. And that's my biggest thing, is that I think I've seen with clients, is that they don't recognize the benefit. Number one, they don't recognize the benefit. And the thing I was talking about yesterday kind of made me mad is, guys, a lot of reps, door-to-door reps or small business owners, they will complain. I had a guy yesterday complaining about the cost to have me coach him. And that's my number one pet peeve, the thing I despise the most. Because, you've got some of these guys out here that will tip $50 at a dinner with their friends because they're trying to look cool or whatever it is, or they just like to tip a lot. But then when it comes to their accounting and their money and building net worth, they're like, $50? No way. I'll just do my own tax planning. Well, okay, that just put you back probably $50 million over the next 10 to 20 years. Just put you back 100,000 over the next year. And it depends on how much money you make, obviously. But most of the guys I meet with make 150 plus.
I walk in yesterday to his office. I actually heard the guy on your speakerphone from my office next door. And I'm like, what in the world's happening? I walk in, and this guy is yelling at Zach that he has to pay $50 to help him tax plan and save tens of thousands of dollars probably. And it's just funny to see people's perspective on the value of money or time. And it's almost like, oh, if you don't do it for free, I'm going to go to somebody who will do it for free. And typically, what's the result?
Well,
right?
yeah, exactly. They go, I'm going to save I'm gonna save $3, $4, $5, $6, $700 by going to this guy that does it for free. I just did better.
But how many times have you looked
how
at their
does
tax
that-
return
Oh,
and seen, oh my gosh, they
You've
missed this
seen-
and this and
you've
this?
seen
Yep.
since
Yeah.
we joined up,
Totally.
what is it, 90% plus that when somebody
Oh,
from
easy.
another firm sends their taxes over, I looked through it, and 90% of the time or more, I can save them at least $1,000.
Yeah.
And that's every, I mean, it
Even
might
if
be
we charge more,
100%.
even if we charge more,
Yeah,
they're typically
I
saying-
could triple the cost
Yeah.
and still save them money.
Mhm.
So that's what bothers me, is that people don't realize that the true value that I add, that we add as
Yeah.
a firm, is that we will save you way more than we charge you. Just think about this year with the ERC and everything else. Our clients are making money by coming to us, like actual cash flow.
Like money is going into their pockets
Yeah.
from the government that we are giving them. We're
Not to
showing them how
mention
use.
the
Yeah.
tens of thousands in savings
Yeah.
that they're getting by doing the strategies that I bring to the table. But the biggest thing, is them not seeing the value of a coaching meeting. And a lot of guys just say, I'll do a 30-minute coaching meeting a year, that's it.
Yep.
One tax planning meeting. And then there's the guys that say, I'm gonna do an hour a month
Right.
of coaching with you. I mean, I'm $100 an hour. Most coaches out there that actually help you build net worth are charging $250 to $500 an
Yeah.
hour. So this pricing isn't gonna last
No, I've seen
long.
tax accountants charge
Yeah.
$4,000 or $5,000. In fact, we have an employee. He paid $600 in personal taxes, and he ended up with a way worse income than if we had done it.
Yeah. Oh yeah.
So our own employee.
Yeah.
So last year before he started working with us, he did
Yeah.
his 2018 taxes with him and paid $600 and had to pay like $3,000 in taxes.
Yeah.
And had he gone with us, he would have gotten a federal refund.
Yeah. Oh,
So-
absolutely. I mean, almost every time
Yeah.
it seems like that's the case. But that's the thing. You're getting anywhere from $2,000 to $4,000, $5,000 worth of value out of us just from what you should be paying us. But we're charging $620 a year plus $50 per half hour that you talk to me. Of course, we have a free version. You can talk to somebody for free.
Yeah.
Or there's a $25 per 30-minute guy that's my protege underneath me, Grant or Connor.
Yeah.
So yeah, we've got all the different options for you, but paying the $50 to talk with me is gonna pay dividends. If you do it once a month, you will be on track to be a multimillionaire. I promise you. And if you stay with me, I believe that I will create thousands of multimillionaires over the next 5 years.
Yep.
So
Yeah.
yeah, I believe that will be true. And what I do in tax planning and the coaching is how I make it happen. We'll
Okay.
talk a bit about it here.
So let's do a quick example. Okay, I'm, let's say my name is Landon Christensen, and I made $30,000 this year
Okay.
selling door to door, or as a Lyft driver, or something. Right?
Yeah, yep.
So
Small business, whatever.
I meet with you and I say, hey, I made $30,000. What do I do? I'm set up as an S corp. I don't know what to do beyond that.
Cool. So my first thoughts would be, okay, he made under $75,000. So as far as coaching, and there's not as much that I can do for this client, but I can definitely get him on the right track, which is super important.
Yep.
Because if you're making 20 to 30 or anywhere in that range, you might feel like, oh, I'm so far away from investing and doing all these things. The fact is you're right on the cusp. And in fact, you can even start now. If you make 30, people live off $15,000 a year.
Mm-hmm.
So do everything possible to save $15,000 to compound your net worth with. And that's part of the plan I'll give you now.
Sure.
But first off, I'd say, okay, I'd write it down. I have a sheet that I actually give to the client afterward.
Yep.
But I'm gonna say, how much did you make? You made 30?
Yep.
Okay.
30.
How many miles did you end up driving?
Let's say I drove 10,000 this year.
Cool. So yeah, we're gonna do what mileage of 55 cents a mile or whatever it is this year. It changes every year. So okay, that's a $5,500 deduction. For those that don't know, that means that before you were getting taxed on $30,000, now you're getting taxed on $24,600 or $500.
Yep. Okay.
So next I'm gonna say, where was it that you sold?
Yeah, let's say I sold in Atlanta.
Okay, and you're not from
Nope,
Georgia?
I'm from Utah.
Okay, cool.
Yep.
So how many days were you out there? The full 3 months?
Yeah,
or full
about
4
100
months?
days, I'd
Okay,
say.
100 days. So we're gonna look up the per diem rate. I believe it's 69 a day in Atlanta. So we're gonna go 69 times 100, that's 6,900. Then we divide it by 2 because all meals are 50% deductible.
Okay.
So it's gonna be 3,450. We're gonna take that off from the total that we had before. So now we're at what, 23,000 or so.
Well, we were at 24. Now we went down 3,000.
Oh yeah,
so,
sorry.
So now we're at 21.
Yeah,
21 or so.
Let's say 21.
Yeah. Okay. So
And
21.
then we're gonna go, okay, how about equipment, new
Yeah.
iPads, phones,
Yeah,
computers?
I bought a new
software?
phone. I got a new iPad, and I like using a Segway, so
Cool.
I have a Segway as well.
Okay, so you spent 1,000 on those, great. We're at 20,000. How about recruiting costs?
Yeah, so I recruited 3 buddies, and I probably spent maybe $400 to $500 total.
Cool, got that on there.
Okay.
Now, what about uniform, like new shoes,
Yep.
shorts, pants, gloves, hats?
Yeah, probably $250 total.
Okay, cool. And you knocked in that stuff?
Yep.
Okay, great. Boom. And then what about your cell phone bill? How much is that?
Yeah, about I would say 80 a month.
80 a month?
Yep.
Okay, boom. Got that for the whole year.
Okay.
Let's see. What else do we got? What about utilities rent during the summer?
Rent was like $2,400.
Okay, got it. And that was for the whole summer?
Mm-hmm.
Great. How much for utilities?
I'd say 100 a month.
Got it. Okay. And then what about office supplies? Did you have any of those types of expenses?
Not really.
Okay. Any advertising?
I'm trying to think if I had any advertising. Let's say no,
Okay.
I didn't.
And do you pay for your own health insurance?
No, I'm on my parents' plan because I'm only 23.
Okay. Mom and daddy pay?
Yep. Mhm.
Cool. Okay, and let's see. Are you married?
No, I'm not.
Do you have any kids?
No. I
Are you
don't.
in school?
Yes.
Cool. Are you at least a half-time student?
Uh-huh.
Okay, and have you taken the school credit 4 times that you know of?
No, this is only my second year.
Okay, great.
Yep.
So that means you're gonna get 1 school credit. It'll be a max credit. Even if you had Pell Grants,
Mhm.
we'll get that for you, even if we have to reclassify the grants.
Okay.
Okay, so got that. Did you have any W-2 income or any other types of income?
I have like 4,000 in W-2 income.
Cool, and
Yep.
they were taking taxes out of that?
They were, yeah.
Great, so that's not gonna affect the outcome much.
Okay.
Hopefully, it seems like you have a good amount of expenses. Hopefully, the amount you paid in on taxes on the W-2
Mhm.
is actually gonna lower your amount due,
Okay.
or add to your refund if you get a refund.
Okay.
Okay, so right now, it looks like you are at 15,000 in
Yep.
profit.
Mm-hmm.
So from there, we can take the 199A deduction, which means 80% of your income is taxable, so that's 8,000 plus 4,000, so 12,000.
Okay.
So 12,000 would be taxable for federal.
Okay.
And then you are a single, so
Single.
you get the $12,000 standard deduction. So
Okay.
now you're at 0 for taxable income, and you are in school.
Yep.
So you're gonna get a $1,000 refund for federal. Yeah.
Okay.
For state, you're gonna have 3,000 of taxable income
Okay.
at 5%, so $150.
Okay, so I pay after making 30,000. I didn't pay taxes while I was getting paid because I'm an independent contractor. I'm gonna pay $150 in state taxes. Now, am I giving myself a wage as well? We didn't give me a wage at that. So am I paying a quarterly tax
Yep,
as
so
well?
for the 4th quarter, you're gonna have a $1,000 wage, so you'd pay $153.
Okay, so I pay 153 in Q4,
Yeah.
and then in next year annual taxes, I'm paying $150 for state income or
Yep,
state.
so you
But now
get-
I also made back
You
1,000
get the
from federal.
1,000, so total out of pocket's gonna be total out of pocket is a $694 net gain
Yeah,
by
I
you.
gained.
Now, to make that even better, we're actually going to take off the 150 due for self-employment tax. We're gonna get you the 4,000, let's say, from the ERC.
Yeah.
So now your net gain is around 5,000.
Yeah, because I wasn't able to sell or work for at least a few weeks, and I couldn't go into a few neighborhoods because COVID restrictions, right? I
Yeah.
couldn't get some licensing some places. So I guess I
Yeah.
qualify as well. So
Yeah,
now
I'm
I'm
sure
looking
you
at
would.
probably
Yeah.
$3,400 plus if we did some sick time, plus if we did the $600 net gain that I'm going to get.
Yeah.
So I'm looking at about what 4,000 something.
Yeah, 4,000 something
With the ERC
gain in
Yep.
your pocket
Mhm.
from doing this strategy with us.
Huh.
But remember, you could go to another accountant and get your taxes done for free. And yeah,
Or TurboTax.
and you'd owe no taxes if you went there.
Yep.
Cool. So that's $4,000 worse. So yeah, people that I could go off on that forever. But yeah,
Totally.
look at that outcome. $4,000 net gain in your pocket. That right there is almost exactly what will happen for, probably 100 of our clients this year.
At least.
Yeah,
Yeah.
like that exact outcome.
Yep.
Because it happens a lot, anywhere from 20K to 40K. That normally ends up being the outcome.
Okay. So we did that example now, and I think that is a very average example of what we're looking at.
Yeah, that's
about those
average.
expenses. Lots of single, unmarried folk out there that we take care of, who are looking for deductions, don't really know where to go. Without your expertise, they probably wouldn't have found as many deductions as they could have.
Yeah.
Or some accountants might not feel comfortable taking certain deductions, which we've done tens of thousands of these.
Yep. So we
So-
know how to take them,
Yep.
and then of course we're going to teach you. If you didn't keep perfect track of those expenses, well then next year you're going to download the QuickBooks Self-Employed app, and you're going to actually start doing it the right way from here on out. For as long as you're doing 1099 or small business work.
Okay.
It's as easy as 5 minutes a day. It tracks your mileage, it tracks your expenses. Anytime you buy something, you get the receipt, take a picture with the app, boom, it logs into the area, and you're done. I mean, it's 20 seconds here and there throughout the day.
Yep. Okay, quick question. So we get this a lot. So I'm not planning on selling next year again. I did well, but I'm graduating. I'm going to do my career. I'm going to do my taxes with you, but what do I do from there? This is a really common question we get, and I think it just needs to be addressed real quick.
So, definitely continue to use us for your accounting and coaching.
Yep.
Although it's much more simplified at this point.
Yeah.
What I would recommend is that you go to the normal client, which is kind of our low-level cost. It's $150 a year, and of course, I recommend doing one 30-minute tax planning meeting with me or coaching meeting per year in the fall. So total would be $200 out of pocket, and I'm gonna set those goals with you. So that's the only thing we hadn't done yet with the 30K example, is I would ask him what his goals were after that point.
Right.
So I'm guessing your goals are to get into rentals and whatnot, right?
Yeah, I mean, eventually next year, let's say I was coming back and recruiting, I'm probably looking at getting into some asset building. That's probably what I'm going to start doing. And so you're going to give me a few suggestions of things to start doing to prepare that.
Number one, so first things first, you've got your foundation, which is important to completely fill. You don't want to leave any cracks in that foundation, otherwise it's going to break down. So we fill that foundation first, and once you've done that, then you've got all this area up here to do whatever types of investing that you want. Your uncle's, $1 million idea that he has for creating stuffed animals for kids. At that point, you can go and try that business. But I don't recommend doing those types of things until you've filled this foundation. Number one is to do your IRA. In this case, you would do a Roth IRA, because doing a traditional IRA wouldn't save you anything now, because traditionals save you money now, Roths save you money at retirement as far as taxes go. So you'd want to put $6,000 into that Roth IRA.
Okay.
It's going to grow to be, $600,000 if you're 20 years old by the time you retire, and you can pull that $600,000 out without paying any taxes.
Yeah, it's awesome.
So you max that out, and then I'm hoping that you saved half your income, $15,000. So I'd say put another $9,000 into your solo 401k, and make sure that it's a Roth as well.
Yep.
So now your 15K is gone. You don't have any more money to invest, and you've done a great job at filling.
And I gained $4,000 in the tax refund and credit through ERC.
Yep.
So
So
I have some extra in my pocket.
The only thing you were short of doing in your foundation was completely maxing the 401k out. You're only 10K away from doing that. Then your foundation would have been set,
Right.
and you could move forward onto doing the other more exciting investments, which like rental properties, that's what this foundation is going to help you do.
Yep.
If you do this foundation, then next year, we're going to be that much closer to
Yeah.
doing the rentals. You're gonna max the foundation again in the following year, and then by the year after that, I believe we could get the first rental for you.
Cool.
If you've maxed out retirement 2 years in a row.
Yep.
And your income jumps up into the 60 or 70K range.
It's awesome. Okay, so in shutting down, I'm not going to use my LLC next year, my S corp. What are just real quick the steps I need to take to do
Just
that?
let us know.
Just let us know, and
On the
then
tax packet, you just mark.
I have
I'm
to have a
not
final
selling.
quarterly,
Yeah.
and then
We'll do your final tax return during tax
Mhm.
season, and then one final tax return in April.
Yep.
And then you're done as far as the S corp billings go,
everything's
and then you'd be
set
on
there.
to the 200
Okay.
a year version.
Okay. All right. So we have a little bit more time. So let's say I am either a business owner or I am a high-level sales rep of some sort that's on
Yep.
1099, and I make 200,000.
Cool. So yeah, I'll do this quick. Basically, first thing we do is ask your revenue. I write it down on the sheet, and then I'm gonna go over each expense. Now, you're not all door-to-door guys, so I know that we're gonna go, depending on what type of business you have, I'm gonna ask different questions as far
Sure.
as expenses
Yeah.
go. But an average 200K earner in the door-to-door industry would probably have around 50,000 in expenses.
Sure.
So we get them
When you
down
look
to.
at incentives and you look
Yeah.
at paid rent and all these other things,
Yeah.
there's
Yep.
a lot.
So we get you down to 150,000, and at that point, I'd say, okay, it looks like you owe 21,000 in federal taxes, you owe 6,000 in state taxes, and you've got 4,000 in self-employment taxes. So you're closing in on 30K in taxes, and the client's normally like, oh, that sucks,
Dude, that brings me down to 120.
Yeah, exactly. It's a huge. It's real bad because it's actually going to hurt your net worth, right? Because you're
Yeah.
going to pay the taxes and your total assets go down. So let's have it improve your net worth instead.
Sure.
So what we're going to do is max that IRA for that person and his wife. So that's 12,000.
Okay.
Then we're going to have them max their 401k out, which would be around 25,000 for the husband or the business owner, and then it'd be about 19. It'd be exactly 19,500 for the wife.
Okay.
So so about 45,000 total into that. 56,000 total between both
Okay.
all retirement accounts. So now we've got you down below 100,000. At that point, I'd say, do you have your own health insurance? Yeah, we have a high deductible health plan.
Mhm.
Okay, I'd have them max out 7,000 into
Their
an
HSA.
HSA account. You just go to the bank, max that out. It's easy. And then, do you have any kids? Oh yeah, you got 2 kids. Okay, I would do 529 plans for both of them, 5K a piece. Cool. Now you're good. And then I would try and get a rental property before the end of the year.
Okay.
If you can't yet, then definitely plan for the next year. But now you're at, let's say, 90,000, and you owe a total of 15,000 in taxes. Let's say 13,000 in
So
taxes.
just doing that ended up, it put money in, I built assets, right? Now
Yeah.
I have something that the banks like because now it's potentially liquid.
It's going to help you build your rental property.
My net
empire.
worth is significantly higher. Plus now it's growing in interest,
Yeah.
right? And that's something that a lot of people don't take into
Yeah.
account. You're putting money into an account that's going to grow in interest. And
Yeah.
so if you give that money to the IRS, your opportunity cost lowered by whatever rate
Yeah.
it would have gone up by
And your
12
net
or
worth
14%.
is just lowering.
Yeah.
Whereas under my plan, it's going
Yeah,
up.
it's going up.
So over time, you will end up doing many more rental properties
Right.
by following my plan.
Okay.
If you just try to do rental properties, you will do far less than the guys doing this plan first.
Okay, so we have 90,000 remaining, and I saved my taxes just
Yep.
by doing that 15,000 right now. So
Yep.
now I'm going to pay 15,000 on 90,000, but I don't want to pay 15,000.
So-
So now what?
Yeah, so what I would do is I would find a 2-year-old Tesla Model X or a Ford Raptor or any truck or SUV weighing over 6,000 pounds.
Okay.
Or a truck with a 6-foot or longer bed.
Okay.
So, and then I would spend $60,000 on it. but I would put it on a loan on December 31st with $0 down.
Okay.
And I would never make more than minimum payments on that or any home that I ever own.
So that's not what's his name?
Dave Ramsey.
Dave Ramsey logic.
Yeah.
That
No,
makes no sense
Because
at all.
I'm not talking to your average guy that makes 50 to 100,000 a year on W-2
Yeah,
that goes and, to the club every weekend
sure.
or whatever it is, that struggles with making payments on their bills. These are guys that make money and are trying to build something great.
Okay.
That know that that's their goal and they're willing to do whatever it takes to get there.
Okay, good. Okay, so we're spending 60,000. Now, what's cool is I'm not spending 60,000 right now.
Oh.
I'm putting it on a loan,
Yeah, your first payment's in February.
but I'm able to potentially claim the entire 60K
Yep, and
on
now
that tax year.
now you're getting a $4,000 or $2,000 refund instead of paying the $10,000.
So I made 200,000. I had 50 in expenses. I put like 50 into retirement and to asset building, and then I buy a vehicle that I'm not spending all my money on, and so I'm making the minimum payments, and now I'm getting an actual refund
For federal.
For
You're
federal.
still gonna have the self-employment due,
Yep.
but net out of pocket will be around $3,000
Okay.
total.
So $3,000.
taxes.
Now, what about I'm married? I have kids. ERC,
Yep.
right?
So you
So
get the
now we're actually earning.
Yeah, probably $20,000 for the ERC.
Let's say if COVID affected you, your spouse worked for you, or you had employees, we've gotten a person at 200,000 to pay nothing essentially.
Yeah, well, to end
The
up
net,
with the net like
yeah.
$15,000
They'll pay some
refund.
self-employment because they have to pay themselves a wage and
Yeah.
those things.
But your net's a refund of around $15,000.
That's amazing. And we could do that. We could keep going. There's more things.
Yeah, oh yeah.
Cost
There's-
segregation.
There's a lot more we can do.
Now we get
so-
commercial properties. Now
Yeah.
we get multi-units, and we start really looking at all these things to grow people's net worth.
Yep.
Compound their interests.
Exactly. Compounding your net worth is
See what I
what
did
I'm
there,
all
Landon?
about. Compounding interest means compound your net worth to the maximum at the fastest possible rate.
Yep.
That's everything I'm trying to perfect year in and year out.
It's crazy.
It can change next year, but right now my strategy's spot on. From all the math that I've done, it's as good as you can get. Other than obviously if you invest in a startup and it explodes, I can't tell you to go do that.
Like COS Academy.
But as far as certain things that I can tell you to do, this strategy's on point. Doing the truck allows you to basically have a free truck if you do it the right way. 2 years old, 60K range for that guy,
Yep.
and I'll tell you exactly what range to get. But that's going to allow you to have a
guys.
free truck for 5 years.
Again,
3
do
to
not
5
call
years.
us when you're at the dealership asking if
Yeah.
you should buy a vehicle. Plan it out.
Yeah, do some coaching. Do quarterly coaching or monthly or whatever's best for you.
And I think this for me when I think about tax planning, like on paper it's not very sexy. But when you start thinking about your dreams and your goals, your
It's
vision,
very
your
sexy.
future, man, it is so exciting.
It's so much more important than if you think about it, we will make 100, probably 1,000 times more money passively than we will make through our career
Yeah.
W-2 or 1099 payments.
Just by compounding
Yeah,
our interests.
exactly. So 1,000 times more money doing that. So it's actually 1,000 times more important than our daily day-to-day.
Yeah.
So for everyone's like, well, I just want to knock more and that's all I care about. Or I want to just push and just work my job and that's it. I don't want a tax plan.
Yeah.
I'm going to work harder to get ahead. Well, okay, but you just missed out on 1,000 times more.
Yeah.
So it's not that hard to grasp that idea because thousands of people do it. There's new millionaires every day.
Yeah.
It's a simple, tried and true process, and I can help each and every one of you do it.
Right. Yeah, if you you know that thought keeps coming to me. If you fail to plan, you plan to fail.
Exactly.
And that's what's happening, right?
Yeah.
We see that every day where that guy's yelling at you because he has to pay $50 to plan his future.
Yeah.
And you're like, dude, I'm going to save you so much money.
Yeah.
And I'm going to put money in your pocket. But it's like, are clients who are like that even worth it?
Yeah, not really. And that's what I've been saying recently to you is
Yeah.
that, we've got so many clients that at some point you have to just say, okay, yeah, we appreciate you. I really do like you as a person because I
Yeah.
do like that guy.
Yeah.
But yeah, go to that other guy that you like that charges you nothing and
Right.
Most
I mean,
likely,
there's been
yeah.
so many cases where somebody's like, oh, I'm gonna go the inexpensive route. I'm gonna actually do it on TurboTax.
Yeah.
And then we look at it, and we there was one guy I remember specifically. He was going to pay $18,000 more in taxes going through TurboTax than when he went through us.
Yeah.
So we saved him 18 grand
Yeah, well,
for maybe $50.
remember,
right?
remember your buddy and regional manager Chase Williams and James Graves
Yeah.
and those guys that
Oh yeah, same thing.
came to us
Yeah.
at first, and we fixed them. We saved them like 20 to
I think
30
James
grand.
said he was gonna pay 30,000, and he's like, no, and the accountant's like, yeah, you will. And then he went to you guys, and he saved 17 grand.
Yeah,
It's awesome. It's
Yeah,
amazing. So love it.
yeah.
Okay, anything else you want to add about that?
I take pride in your future, take pride in your goals, and if you were going to get surgery on your leg, would you go to the best? If you were, if you were an NFL
Yeah.
running back, would you want to go to the best and pay whatever it costs to fix that knee, or would you want to go to the guy that's offering to do it for free just to save that, $50,000 on the surgery? Obvious. That's a dumb question. Of course, you're going to go to the guy that is the best. Should be the exact same way with your accountant. I mean, think about it. The results will be the same.
Yeah.
The guy that does it for free has no reason to care about your outcome.
Right.
So he's not putting in the hours trying to make all these things happen for you
Yeah.
when he's not getting paid. It's just not happening. So take pride in that. Take pride in everything that you do. Take pride in the people that you use for service, and respect their time, respect what they do for you, and be willing to pay a reasonable amount. We're charging a fifth of what we should.
Yeah.
So we're definitely respecting you and your money and your situation. Our goal is to basically bring forward small business and door-to-door sales to the highest level possible, and we'll do whatever it takes to get there, even if
Yeah.
it means charging a fifth of the price. But at some point, you got to respect my time and the fact that I can't do free calls for a half hour, with thousands of clients.
Yeah, it just doesn't work.
Yeah.
So with that, I was just thinking, and this always comes to me as well when I'm talking to clients, that the wealthy understand taxes. They get it. They have someone in their back pocket, someone who is, chirping in their ear, put money into this, put money into that.
It's not that they understand it;
Yeah.
they understand the importance, so they hire
Yeah, the
good
best.
accountants. Yeah,
You don't see multimillionaires hiring cheap accountants.
they're not going to H&R Block.
They're spending thousands of dollars. So if you want to spend thousands of dollars with us, that'd be great. But we don't charge that. So
Yeah.
Anyway,
Unless
okay.
we do your bookkeeping or whatever. But
Yeah. And there's tons of things we're going to continually offer. But with that being said, I think that was a good one.
that was a good one.
Fun. Okay.
Yeah, hopefully that's helpful.
Okay, so as per usual, compound your interests and give us a call. And we'd love to work with you. And if not, just go to a good accountant. I think that's the most important thing. Is that somebody that's going to actually take the time to give you the best outcome. So
Absolutely.
all right, thanks for listening, and until
Awesome.
next time.
Thank you.
We good?
Great.
Awesome.
Sweet.